Welcome to the new Barbarians Podcast. I'm Bill Mann.
And I'm Mark Connors. We're here to deliver insights on how current market events impact the traditional investment portfolios of stocks and bonds that Bill and I traded on Wall Street. Today, we see digital assets as the next frontier for finance and investment.
We're also here to explain how cutting-edge tools like AI and disruptive tech are the new barbarians at the TradFi gate.
So instead of Mike Milliken's innovation on debt financing with junk bonds, today's barbarians at the gate are changing the landscape almost daily across regulation, legislation, and finance.
So hit the subscribe button and let's cut through the noise together. Hello everyone, welcome to the new Barbarians Podcast. This is episode 31. Today's August 6th, 2025. Today we're joined by Jonathan Small and Ed McManus. At first we thought we were just having Ed, but we were actually joined by Jonathan, who is the CEO of the Tradesmen Collective, and Ed is the Director of Investor Relations. Today's discussion will be about tech startups again. TTC USA's integrated platform is solving industry-wide inefficiencies with cutting-edge software as a service, secure escrow services, and legal support. And Jonathan will talk about his business, and Ed will talk about some of the startup journey that he's been on. I will pass it over to Mark so he can update us on the markets, and then we'll talk to Jonathan and Ed.
Great. Thanks, Bill. Let me get this screen going here. Hopefully you guys can see it in 3, 2, 1. Nice. All right, well, first, Eddie, right? Is it Eddie or Edward?
Ed works, Mark. It's all good. Friends and family. Ed. Eddie, you know how it goes.
Good, good. All right, Ed, John, thanks for joining us. And as we go through this, I don't want to be the guy in the corner with the green shade on his head talking about numbers. Anything that you see that we talk about that's relevant to your business, what you see in your family, et cetera, dealing with unemployment, dealing with returns across markets. And that's why we try to have different folks on so we get perspective. So with that, I'll kick off and dive in where you see fit. We always start with the global card. The global card looks across all 3 regions, all asset classes, and says who's in the lead and how long have they been there. So across equities, bonds, commodities, credit, and Bitcoin, we see that the 2 leaders are the preservations of capital, those that fight best against debasement. And we'll have a slide that, again, Bill, I snuck in there from last week because I think it needs a second viewing on why Bitcoin and gold continue to lead the charge, with Nvidia in non-U.S. equities in 3rd place. So let's look at year to date. Gold up 29%, Bitcoin 21%. So here's the trade part. Maybe you guys at Tradesman can tell us how it's impacting your business. Non-U.S. equities are up almost 20% year to date. Prior to the start of the year, they were compounding, as you can see, at something like 8%, less than 10%. And over a 20-year period, something like 6%, because growth is dead in Europe. So why is European and Asian equities, why are they up 19%? Because these are denominated in non-U.S. assets. 10% of that value comes from the dollar. So the 3rd leading year-to-date asset is because we have actively debased the dollar by pushing DXY down 10% year-to-date. That's got to impact trade broadly. We think that's inflation. We'll talk about that. But that's the insight from the 3rd leading asset, EFA ETF, which is, again, non-U.S. equities, or non-North American equities. And everything else is a single-digit midget. So we'll go on to the other trends. On a 5-year basis, Bitcoin still conquers all. And we're going to say that there's 2 other assets that lead the chat rooms in probably 80% of Twitter, LinkedIn, and boardrooms, Bill, and half of it is in your area, and that's with Nvidia. Nvidia, Bitcoin, and MicroStrategy. And John, have you guys heard of MicroStrategy? I want to know how much of an echo chamber I'm in.
I have not, actually.
So that's a left for dead software company in McLean, Virginia, that 5 years ago decided to use its $500 million of cash and buy Bitcoin. They started buying Bitcoin. They were, I don't know, I think they're like a $1 billion enterprise value company. They're now a $100 billion market value company. They're in the S&P 500, and their options are the 6th most traded single stock in the world. Came out of nowhere. And that's because they injected Bitcoin. So, the reason we have you guys here is because you're injecting intelligence into your business to order and optimize everyone's life, to keep the lawyers away, projects on time, and the like. That's what this guy did. He said, my treasuries are not storing value for me. Interest rates went to zero during COVID. Why do I have cash on the balance sheet if my costs are going up and my treasury's not paying for it? So that's that red marker. That guy was literally left for dead. He said he was a melting ice cube. Couldn't compete with Microsoft. And now his returns swamped them. It's just fascinating. And then obviously the other dominant theme that drives the other pillar of our podcast is NVIDIA, a hardware company, think, hard hat like you guys, and converted injecting software into his business. So he integrated the two, and then, the rest is history about how they have just trounced every other multi-billion-dollar equity out there. So it's a trio of MicroStrategy injected with Bitcoin and NVIDIA, who injected software to just harness all of the demand out there. So that's the markets in a nutshell. As you see, it's a 10-year-long dominant theme of these three folks, more than Microsoft, Amazon, Google, Apple, Tesla, even Meta. So on the market side, just looking at recent trends, Coinbase, which led the charge. I don't know if you guys saw the UK commercial that got banned by television where they basically said, we're screwed in the UK. I mean, they just can't help themselves. But it was a brilliant stroke because they got more notoriety, Coinbase, the digital asset exchange, for the commercial never airing than if they probably did if it did air. And so there's still resistance to digital assets, especially in Europe. Ether, because of stablecoins, ETH up 48% in the last month, maintaining that surge on the back of stablecoin legislation. And then some of the other, Robinhood coming off of its 180% year-to-date move. So things are slowing down. And Bill talked about that last week with meme stocks like Donut. What was it? Bill, what were some of those tickers?
It was the DORK acronym. So Donut was Krispy Kreme. I should know the rest
Open
of it.
Door. I think Open Door was one of them.
Yeah, and
Glass ceiling or glass.
glass door.
Flowers was another one, and Beyond Meat. Why that ever?
I happen to see.
I don't think John and Ed eat Beyond Meat. You guys eat that stuff? I guess it's
Not so much. Yeah.
so. That means you didn't lose money by buying the stock.
Stop making assumptions about my new friends.
That's organic. I do have plenty of NVIDIA, though.
Attaboy. Listen, that's one of the leaders. Yeah. So, Bill, I'm going to finish up on the employment note. And this is one of my favorite charts because we have a wartime finance approach where we have debt that we haven't seen since World War II when we were, aligned with the Allied against the Axis. We went, to build armaments to fight a world war. That's why our debt went up. And the question is, why are we at the same level of debt? What war are we fighting? Who are we fighting? And how the hell do we get out of it? And before I give you the answer, let me tell you that we're actually going to increase that debt load. So this is the stair step of looking at the debt ceiling, which is a farce. The debt ceiling is a legislative feature that restricts Treasury from breaching issuance until Congress says it's okay. So it's basically a kid in the corner holding their breath until they get out of the timeout. And they get out of the timeout, and guess what happens? They pump it up. And I'm going to lean on the construction guys here. If these were steps in a New York City apartment, would they be up to code? How's the stability of that rise over run? It's a little dangerous, folks, isn't it?
Be a lot of broken hips.
So, and you bring up old people. The reason why we have this level of debt is because of demographics, because we're funding Medicare and healthcare. So for the first time ever, we actually set a debt ceiling that's ahead of GDP. Second time, rather. One was after COVID, and then we just, with a big, beautiful bill. So what this means for you guys and the team tradesmen is that people are looking for cheaper, better ways to get their product faster because cash and taxes are going up, and people aren't going to have the same buying power they used to, because as we talk about, more debt means more dollars. It means that your wages don't go as far, and that's one reason why these assets like gold and Bitcoin are going up. So last thing I did promise was to answer something about the employment number. The employment number, we went out in a tweet to promote this podcast, and since I teased the fact that I follow up on what Rick Reeder, who in my opinion is one of the best fixed income analysts on the planet, at Lehman in the 90s, and then he runs BlackRock's probably the largest fixed income book on the planet. He said the employment number was notable because they reversed over, on the new jobs front, over 258,000 jobs were reversed out in 2 months. They over-reported and then reversed them out. And he said, that's news, but what the other news is that if you look at the type of jobs that were then created, healthcare accounted for 200% of the existing jobs, pre and post revisions. It means that the only jobs left are services, not manufacturing, and they're in healthcare. And what he didn't say, and this is what I promised, the long-running thread here, is that the reason why healthcare is persistent is because that chart I last showed you, where there's government funding, is that healthcare is one of the largest mandates the U.S. government has. And they're buying jobs, and over a third of the new jobs before the revisions were in the healthcare division, supported by Medicaid, Medicare, etc. And so the private sector is contracting, the government sector is stepping in, and that isn't great for our fiscal situation because it means that the government is now the employer of last resort. So that's how I wanted to end it, by saying, buy your gold, buy your Bitcoin. You guys already have the Nvidia, good for you, because this train of fiscal dominance, leading with debt, asking questions later, ain't over. On that happy note, you guys take over.
So debt-funded positive employment revisions may be coming to us, but those are going to be government jobs funded by debt that our children pay for.
Thank you. That's why I'm in business with Bill, because he lands planes quicker than I do. That's exactly right.
Cool. Well, we actually already have a question, and I will get to your question, Hans, but I just wanted to give Jonathan and Ed the chance to introduce themselves and just tell us about your business. And I'll start jumping in with questions after we just kick it off.
Well, my name is Jonathan Small. I am co-founder and CEO of the Tradesmen Collective. I designed a Tradesmen Collective to stop everybody in the building industry from stealing from each other. So a little bit of background about me is I'm a master electrician out of Fairfield, Connecticut, and I built a really great business, I'd say about 5 or 6 years ago. It was called Marlin Electric. And I worked for about 19 contractors, and I had the great opportunity for contractors to take advantage of me and not pay me a large sum of money. So by that happening is how I created the Tradesmen's. We're a platform to stop thieves, right? So as me as electrical contractor, it's unreal. This is really unreal. So, for example, actually this happened for the last couple months. I did a big condo, and the contractor is about 60 days out for 110 grand, and it actually just cleared this morning. So I had the great experience of fronting the supply house, fronting the labor, and fronting everything that was done for that project. And unfortunately, we live in that industry that, as a trade, we're a banker. I didn't know I was a banker. I'm a contractor, right? So the last thing I want to do is chase my money. I want to be paid fast. I want to be paid on time. And I feel like, the contractor should be paid fast and on time, and we should be able to prevent everybody from stealing. The homeowner stealing, the contractor stealing, the subcontractor stealing. And this is an industry that hasn't been touched in this way before. My personal experience in the industry and how I built the tech and how I built the company is that I want to forever change the building industry that is absolutely corrupt and wrong. And I haven't seen any other products on the market to what I'm trying to do, right? So contractor comes in, that's how the contractor buys a car, that's how his wife buys a car, that's how his buys a car for his kid. Now, if I'm waiting for money, I'm not sure if I'm going to be paid. How does that guy be able to afford these toys or pay for his lifestyle? So essentially, I'm protecting the contractor's money so he's able to pay his bills and not be stressed out, right? So that's pretty much what we do. I can get more detail with a question.
Yeah, I'd like to go in. So tell me, can you walk through an engagement of a condo being built? You're a subcontractor, or are you handling, in your new business, you're not in the job, your new product is managing the process?
Well, okay, so I'm not a contractor in any way. What we do is we provide, the homeowner comes onto our platform. They decide that they don't, want to be taken advantage of. What we do is we escrow the project. By us escrowing the project, the homeowner doesn't have to worry about the job being taken advantage of, right? So the contractor does not get paid directly anymore. The contractor gets paid by the Tradesmen Collective, right? And he gets paid his profit only. We actually pay all the subcontractors. By doing that, we're managing that the homeowner cannot steal from the contractor, and the contractor cannot steal from the subcontractors. Because now we're giving complete transparency that was never transparent. How do you know that the contractor paid me as an electrician? Right? You don't know. You don't know when I'm starting, where the job process is. No one knows, right? Only me and the contractor know, right? So you don't know that, and the homeowner doesn't know that I've already done 3 jobs of that contractor and he's paying Peter to pay Paul, and I'm behind on payments because he's financing his yacht, right? Or whatever toys he has. No one knows this stuff. How do you know that the contractor has paid his supply house? How do you know I paid my supply house? How do you know all these things? No one does, right? What happens is the homeowner gets bit in the middle of the project financially due to the fact that, the other contractor took the money. And that happens a lot in my profession because I'm a subcontractor, right? So, or vice versa, the homeowner doesn't pay the contractor and that trickles downstream, right? So I'm working for the contractor is working for the homeowner. If the contractor doesn't get paid, that kills me because now I have to take legal action against the contractor and the homeowner. By going through our system, we can eliminate all that. Actually, the homeowner doesn't have to live in the United States. They can live anywhere because it's how we do our escrowing, our processes, our milestones, and our own personal inspections to make sure that the job's moving forward. As well as every submission that goes into the milestone payments, they have to take pictures of the project as well. So it builds a really great digital file for the homeowner so they can see the whole process and actually know exactly where everybody is. You can't say the electrician's going to show up and the electrician was there, but the electrician was never there, right? So, or when is the electrician starting? Well, the electrician's not starting because he didn't get a starting payment. Or after rough inspection. So we prevent the nastiness of the business that people don't want to talk about, they're scared to talk about. And they're embarrassed because they don't want to share it with friends and anybody in the industry because who wants to admit that they just got robbed by somebody? Everybody thinks, they're smarter than everybody else.
So, John, this is permissionless, meaning it's all set up and transparent ahead of time.
Correct.
It's permissionless. It's relatively, I would say, not decentralized, but it's not centralized with one agent acting for their own benefit at the cost of others.
Correct. Hey, Mark, my name's Ed McManus. I just want to take this moment to jump in also on, because John and I work really well together.
Please do interrupt, Mark.
Yeah, no, I love the sound of my own voice too, so I know the game. So my name's Ed McManus. I'm serving as Director of Investor Relations and VP of Operations right now with John. My background's in finance and accounting for law firms. I've done that for 17 years, and I was down in North Carolina, moved back up, got in touch with John, and was moved by his mission really to change and turn the construction industry on its ear, and I've kind of been on board since, and the more I've kind of flipped over the rocks and seen what John has dealt with and what the industry really is about, it's kind of like perfect timing just to take the risk out of a process that so many people for so long have just blindly went along with, whether it was meeting with contractors, knowing them for a few weeks or so, and then handing over large sums of money without real, security, assurity, or deliverables, and a continual maintenance process. And what John essentially has done with his platform is de-risk the whole aspect of it on the side of the contractors and also on the side of the homeowners. We'll get into that a little bit later, but more so, the engine that really drives this is the platform of the tradesmen to unify guys that are starting out. They don't have a business plan. They kind of have been going on handshake deals and are trusting that people are going to do the right thing and not essentially securing their asset, their work, which secures their family and their lifestyle. And kind of on my journey with John through this and reaching out to tradesmen, reaching out and just talking to people that have homes, that are doing renovations, the amount of insecurity and distrust that's really out there. So we're really just trying to change that. The serviceable market, the total addressable market is $522 billion, which is massive. And there's not a single platform that really covers all the bases that we are covering with the Tradesmen Collectives. I hope in my own incoherent rambling I kind of struck upon.
Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe, as it really helps us grow the podcast and bring you great content. Thanks for the support.
It's good, and I'm glad that we clarified the term collective. I was like, oh, is this some communist thing? But I really like Jonathan's analogy for you being a banker, and in the corporate world, that's called working capital financing. And if you're an investor, you love a company that doesn't have to finance its working capital. You have someone else paying for your goods and services that you sell. Like, that's a great place to be. But it seems like, everyone's going to usually behave in their own interests, and comparing it to theft is probably appropriate. But, it's kind of it's kind of contextualize this a little bit with banking and finance, and collective in this case, I think is closer to like credit union or people pooling together resources to get proper treatment with their counterparties. And so it seems like you're really just bringing this industry up to speed with, where a lot of like the corporate world and banking has been for a while.
Essentially, in the beginning, it was about protecting the tradesmen, and with just kind of like the back-end legal and compliance tools they just didn't have access to or facility for. And then it turned into kind of more of an ecosystem of kind of getting leads to them and also building that relationship so they could thrive. But it was more of a relationship side, so then it kind of like fostered this lead generation side where that's not what we do, but it was just like an added kind of sweetener, if you will.
Well, I mean, it affects everybody. It affects his teachers, bankers, everybody. Everybody gets burned. I see the craziest thing is being in the building industry, and you're on the job and you see it happen, right? You see the project start falling apart, and you're like, oh my God, I'm going to get took for this money. And the homeowner, I just saw a house not too long ago. The homeowner job fell apart for a contractor. No garage doors, house not finished inside. Contractor skated. I leaned the project. I foreclosed on the project. Homeowner's devastated. That was their savings. This is like their baby, right? This is like, there's not too many times in your life these people can redo their house. Or they have to fire the contractor or find a new contractor and it costs double. It's very, very, very simple. Hire us. You don't have to worry about it. It's gone. It's all gone. And it's like, and it doesn't matter where I go. It's in Rhode Island, at a event, and for the company I'm talking about it, and one of the investors is like, oh my God, that just happened to me not too long ago. I had to redo the house twice. So it affects everybody. In a room out of 100 people, you can grab 5 people that have experienced or family members experienced it, because America's built with trade guys, right? And it's underlooked. We're so underlooked. Like, we're in a $600 billion market that no one really pays attention to like the small guy. And we're the small guys, right? But yeah, we build everything, and no one takes care of us. And it's just crazy. And then we have hedge funds buying our companies, and they're grouping all the plumbers together, all the HVAC companies together. And I'm really interested, since you're talking about markets, and really curious how that's going to work out for everybody in the industry too, Because now they're taking 10 companies, and one guy's running the 10 companies.
Yeah.
So it's another.
Just to kind of like connect the dots of how we're able to kind of provide that assurity and security is the other founders of the Tradesman and TTUSA is Gottlieb and David Rosenberg, who are both our lead counsel, and this was a partnership John had forged, playing paintball, and it's like came up with this idea of like, I'm tired of these guys getting screwed. What are we going to do? How can we do it? And David and Ian, were like, we got the contract side, we've got the experience in kind of litigation and housing and all sorts of things, and it made sense. So it's like, we're trying to build this platform where trades guys can feel comfortable knowing they have access to like immediate kind of debt buying support and asset protection, which is really nowhere. And it's kind of common. And in the state of Connecticut, if you're doing any sort of work over $5,000, if you don't have anything in writing, you have no like legal recourse, which is exactly what happened to a close friend of mine, a builder who had a subcontractor build a flat roof for a client, who then promptly said, thanks for the work, I'm not paying you. And this contractor is a good contractor, paid his sub because he does great work, but ultimately was out $45,000. That and this is recent stuff. For what we're talking about, the debt ceilings and exceeding GDP and kind of like the scarcity of working capital and or this people wanting to inject liquidity into the market at the right times. This is something that kind of provides that stability, de-risks everything, and should give people assurance when they're doing these projects that they're going to get deliverables and everybody's going to get paid, so the work's going to get completed.
So, John, you were talking about the hedge funds coming in, and I think you asked a question about what's their goal or whatever. And given what Ed just said about working capital, I think what the hedge funds, this is what their game of rolling up. They did it with funeral parlors, 20 years ago. They will take units in, they will take expenses out, and they're focused on bottom line and an exit. So they're focused on a 5-year or longer exit plan with the equity, and the near term be damned. It looks good at the outset. What you guys are doing is preserving top line so the equity can flow to the contractor and retain with them. It is, I don't know how you sell it, but Jesus, I would think that would be much more attractive because the equity maintains with the tradesman.
I would say it's kind of preserved, if with the use of escrow and how that kind of factors into all these projects and project management, it's the security in escrow that preserves the equity. Because if a contractor's not happy, he's still going to get paid based on the third-party arbiter that's coming in to review the work, which is the tradesman. To say, oh yeah, this is what the contract stated, this is what the milestones were, this is what we reached, bam, funds released. Or the owner saying, you know what, I don't like the work that was done, that money's still in escrow, so if there's got to be further litigation to determine the next steps of that money's still preserved. It hasn't just kind of, dissolved.
So, excuse me, shame on Mark for claiming that hedge funds do this. These are private equity funds. They're different than hedge funds. Jonathan, you're excused for making that mistake. Hedge funds is a catch-all to a lot of people.
They do call me, though.
Yeah. So certain hedge funds may be getting involved in this sort of thing. I do want to get to some questions that came in so we don't lose our audience. The first one, let's see. Do the trade unions assist you if you aren't paid? Because you're a master electrician, I assume you are in the electric union of Fairfield County.
Okay, so I am not a union. I'm not in a union. What does happen is with Connecticut, different states have different allowances of the recovery that can be made from a contractor doing bad. So by us paying into our electrical license every year, that money gets held by the state to help recovery some of the homeowners that get taken advantage of. It's not a large sum of money. It's not enough for people to get whole in any means. It's a very small amount.
Bare minimum.
Okay. Another question. I wonder if the tariffs have negatively affected your clients from your platform. Has it affected supply?
Oh, absolutely. So at least in the area that I live in, I'm extremely busy as an electrician, and there's plenty of work. Now, the question is, I haven't seen the supplies like copper and other stuff really raised to a point that it's scary. It's not like COVID. When COVID, roll of wire was $25 and now it's $89, right? So now we're kind of set like a bench that's been kind of even. So I haven't seen material raised to a point that it did during COVID.
Interesting. I wonder why that is, Mark. Do you have any thoughts about why the supply chains got so much worse with COVID versus tariffs? I'm not sure where copper's competition is.
I think COVID was it COVID as well as the Q1 Russian-Ukraine war in 22? Was that like a bump, or was COVID an automatic shutdown? Yeah, I mean, economy stopped because money stopped, payments stopped, so production stopped. People didn't come to work, they couldn't produce anything, and just the whole payment thing stopped. That's why they flooded money. On the tariff side, I think people knew it was coming, and they bought ahead of time. That's why we had that Q1 decrease in GDP negative, because people were spending money to hoard and then bled things out. So I think we have a bit of a buffer that is bleeding out, and we'll see what happens Q4 and Q1 next year.
And there must have been some advantageous rip-offs too. Like, I'm not sure exactly where.
Is there any other kind of rip-off, Bill? I mean,
Well, when you have a sort of opaque excuse and you'd be like, supply chains, yes, COVID, there were ships waiting in harbors that couldn't deliver goods and services, and that was worldwide. But when it comes to copper, I just don't recall. I know that a lot of it was going to China for growth and stuff like that, but that shouldn't really raise the price of copper here. But yeah, interesting, and I think this is the type of discussion that leads us on a different path from what we typically talk about. That's actually one that's worth following up on, and I think it'll be cool to talk about in the future, like why was copper so inflated versus other things, and within the trades, it seems like maybe that was such a good opportunity to rip people off, and this time maybe not as much because there's just good competition in the market. If everyone's busy and there's a lot of demand, the supply shows up. I don't know. It's worth looking into.
Well, I mean, when COVID came, the trades guys pretty much stayed busy, right? So, if you have COVID or not, you still need an electrician, right? Or you still need a plumber. So that hasn't changed because I'm a service company. So I think that, with the supply houses, the vendors that sell copper weren't making the profit that they originally needed to support their business. So they had the opportunity to slow down demand, right? Demand was still slowed down a little bit, and the profits raised. So I changed that, right? I mean, it's not this copper, it's also petroleum, right? Because you got the plastic coating and PVC and the breakers and all this stuff. I mean, how plywood went from $18 to $59. Was there less trees in the U.S.? I don't know. That's thought basis going back to that point.
It's very interesting when you think about the various middlemen that are involved in pretty much every industry, and oil and gas is an interesting one. Between the well and the plastics, in that case, there are many middlemen, and it seems like in your smaller ecosystem even, subcontractors and contractors and this financing of working capital is just sort of made for that sort of situation where, especially with relationships, and you can, if you've been doing business with someone for a long time, they can call you up and, track you down. But if you don't have a really long-term relationship with someone, it seems like your business would really enable the, goods and services flowing really appropriately.
Well, you'd be surprised, right? I've worked for contractors for years, and then all of a sudden he gets divorced, right? We're human. Gets divorced, starts gambling, starts partying. He's not paying his bills. He's not paying attention to the job. You don't know who's good or bad. And I've been in both shoes. I've been with guys that I've done millions of dollars in business with that have hurt me the most.
Right.
And I have done, small jobs and been hurt. I see homeowners get hammered, and subcontractors primarily get hammered. And sticking up for who the people actually build, right? You got a builder, and then you have all the subs. Who builds the house? It's all the subcontractors, right? But everybody's like, oh, that builder is great. That builder's only great because he has great subs, right? So it's like no one's watching us, and it's a huge problem. And it's not this in Connecticut, it's all over the United States. It's unbelievable. It's really, really unbelievable.
It'd be interesting to see the numbers of fraud, waste, and abuse that come out of California with the rebuilding after the fires too. And there's no recourse and things like that after natural disasters. The other thing I was just going to kind of say, we're really, we're really looking at kind of both sides, from the tradesmen also and the homeowners, and the market's been primed by companies like House and Angie's List who are selling a product to homeowners. They're selling one thing, but it's really not that, and a lot of trades guys are really getting burned by those companies.
I got burned by a company from Angie's List, a homeowner through it. I lost a little over $15,000.
And so while we're kind of trying to create this, change and change perception too, add that security where, we're kind of taking care of the trades guys, but also, helping homeowners find the right people at the right time versus, them just being used to very low quality and then getting a little smidge above that and being like, oh, this is great, because they have no idea. They've not really been properly serviced.
Well, I know a lot of hedge fund people that would be very upset about losing $15,000,
Yeah.
But it seems like for you, it's just like, it's a used car or something, no big deal.
Well, you get used to it.
Yeah.
You get used to being stolen from. Like I said, $110,000 I was waiting for it, literally deposited this morning. I can't let anybody know I was stressing about it, right? Because you just can't. Then you look, then they start digging into you. You can't look weak. But I didn't realize I'm a bank. Where's my interest? I didn't get it. They missed that. Or did I have to take money from a loan to cover all this to wait? So now I'm paying points on top of that. I still haven't received my money, right? So now I'm losing more money just to hold that money. And I'm not a banker. It's not what I do. I went to school to be an electrician. And tradesmen really need to be taken care of, and no one's doing it.
Wow.
So I want to change this industry, and that's what I'm going to do.
So the name of our podcast, The New Barbarians, is about disruption, and that's why we invited you today. And, tech disruption, there's definitely a tech play. I think there's probably AI and data and a lot of other things that we always talk about and that you want to monetize. So this is a great opportunity to talk about a totally different industry that, maybe our audience doesn't know as much about. It's already been cool to talk about copper and things that we observed from a totally different angle. I do want to get to another question, and this one may be for Mark first, and then Eddie, and then myself, and I'll just assume that Jonathan may not be an expert in blockchains. But
They weren't coming to me about, is a true 2x4 still available in the market? I know they weren't going to ask me that.
is the business executable? This comes from Traveler Jeff. Is the business executable on a blockchain via smart contract? If so, would there be an option for liquidity providers to support the process?
So, Jeff, as you know, I'm not an Ethereum degen, but that's where it would probably reside. And the answer is yeah. That's why the reason I think Jeff is asking that, he's someone that's familiar with Bitcoin and blockchains. And when I was ribbing you about transparency and decentralization, is you guys sound like Bitcoiners. You're taking a process and you're trying to rip it away from a central actor that can make oriented decisions or advantageous at the risk of others. And you're adding transparency, you're adding rules, and that's basically what Bitcoin is. So, Jeff, to your answer is yes, it could, and there's no reason to now because the way they're doing it is such a stepwise function of improvement with familiar tracks of escrow agents and lawyers that it would help from a business standpoint because all parties understand that process. Eventually, it would probably be migrating to a smart contract, which would reduce costs further. That's my opinion.
And I did want to interrupt and just ask for some clarifications about the terminology, but it's probably better to just put Ed on the spot and ask him about smart contracts.
Great question. Great segue too. So we've got our apps built, and the apps and the contract side are built kind of around the DocuSign model, right? So the ease of use to creating the contracts. When we sit with guys is really, it's designed by a tradesman for tradesmen. So the ease of use is right there, but we've all signed contracts through DocuSign. We know how easy that is. It's taking that existing technology and just propelling it forward to these applications, and then it's just changing the patterns of behaviors, from handshake deals to a couple finger taps and then a send off.
And do you know what smart contract is specifically?
Nope.
Got it. So smart contracts are primarily on Ethereum, and I think when it comes to crypto and blockchain technology, it's using technology to keep track of transactions.
Right. Yes. Okay.
Smart contracts in particular are fully executable digitally. So you basically have this digital contract that once the terms are met, the contract is complete. So you don't even really have that back and forth with the DocuSign, another middleman perhaps, but that's actually sort of just documenting, and there are certain laws, especially with real estate, where things need to be on paper, and that's why when you buy a house you have a stack of paper and you have to sign like 100 things. But with technology now, like Ethereum, they're trying to automate a lot of the settlement process. So I think to answer Traveler Jeff's question, and Mark appropriately said, this is the type of thing that could be put onto a blockchain and automated further. But it sounds like you guys are solving the problem incrementally before you get into sort of crazy.
Before you can run.
Yeah, there you go.
Yep.
And here, I guess we'll just continue with Traveler Jeff since he's going to keep us on this topic a bit more. This, I guess, is for you again, Mark. The backend developed to ERC-20 would unlock billions in capital to support the tradesmen. Are you familiar with ERC-20?
Yeah, ERC-20 is the token used where you guys could create your own token, your tradesman token, and ride globally on it. So Jeff is bringing up something that I know you guys got a lot on your plate. that would expand you to capture that $522 billion market. It doesn't just intermediate you, it scales you. And that's why when you were talking about it, and I'm glad Jeff brought it up, again, I was poking, I'm like, Jesus, you sound like a blockchain, which means efficiency, accountability, centralization, everyone gets served, middle people, less mess. And as Bill said, it's like a vending machine. You put the quarter in, and then 8 seconds later or 5 seconds later, you get your Coke. I mean, that's how a smart contract works.
Well, yeah, back in my day, you actually had to sometimes give a hip check to the Coke machine as well. You know, if you had really small arms, you might be able to get a free Coke every once in a while, too.
Now you sound like SBF. That's the game he played. Two smart contracts.
My, how the times have changed. I actually have another one from Chris Fisher. Love the business and how you're supporting both homeowner and subcontractors. Can you tell us more on how you're connecting the two and certify the work?
Sure. So how it works is the contractor signs a contract. It's built by milestones to protect that, right? So every milestone that is set by the contractors to get paid by the escrow company, the tradesmen's actually send inspectors out. What that does is we're able to prevent damages after any normal inspection, right? So if contractor, the tradesman's, inspector comes out, the job site's a mess. These are like pre-flags of how the contractor works and to look out for it, right? So we can also pre-predict what this contractor plans on doing by knowing the project, how clean the project is, how the project's presented. That will help us eliminate bad contractors, right? So it's, you know who's professional and you know who isn't, the bottom line. Right? So by each milestone that is completed, we have inspection. So that protects the homeowner, the subcontractor, and the tradesmen as well. And that's really important. By each milestone, as the contractor is getting paid as profit only, the contractor doesn't have to pay his subs. He doesn't have to worry about 1099s. He doesn't have to worry about insurances. Right? We take all that away from him. It makes everything super easy. Now, what's really great about it is if the homeowner, if the subcontractor, like the electrician, wants a payment, the contractor still has to have full control of the project. So that milestone gets signed off by the contractor. And if that gets signed off by the contractor, then it gets signed off by the homeowner. Right? So now everybody is approving what work has been done. So there's like, oh, I didn't want that wall in the middle of the house, I'm not paying for it. Something like that. So it gets rid of all the extra BS on the job. That turns into a major pain point, almost like the same as like addendums or extras. Like I put 20 recessed lights in your room that you didn't plan for, and then at the end of the project, I'm not paying you for that. We had a verbal agreement. We're able to send that information in on real time, real fast, and have it funded right away. So it's fantastic. And the great thing about the milestones is if I'm the electrician and I decide that me and the contractor don't like each other, and it happens, I can bypass the contractor and go right to the homeowner. I could bypass the homeowner and go right to tradesmen. That's how we protect it. Everybody's in the same field. That's how I protect everybody in the whole system. Very cool.
I don't want to focus on crypto too much, but a lot of this does sound like proof of work and that sort of thing. And getting back to like MicroStrategy, maybe you guys are a $100 billion company and you don't realize it yet.
I know that.
Hey guys, if you got anything out of that last segment, don't forget to like, comment, and subscribe. It really helps us grow the podcast and bring you great content. Thanks for the support. And so this is actually a good opportunity to bring up where are you in your journey? It sounds like you've actually solved a lot of the problem and you have a very good operating business and you're successful. So what are you guys up to now in your journey?
So we are on our second phase of capital raising. Our whole system's completely built out, running. We have about 600 people on our system. Yep, both apps are done. The housing real estate side is completed. We're open. We're ready to go. We're launching a really good-sized campaign in the next month to boost numbers up for raising more capital. So we're in that place.
Capital raise is really more for advertising, as most of the tech has already been fulfilled and built. So it's really just kind of building awareness that people have an option. Contractors have an option to the dialing for dollars at the end of the month and getting burned on work they've already performed.
So marketing, everyone's, I think, using social media for this type of thing. Like when we needed a plumber, my wife went to the Darien Mothers group or something.
Yeah, we're on top of that. Absolutely. It's a very big platform that we're putting together. So I'm going to build the back of the train. I want all my contractors, right? My subs, I want to be able to change industry. I want to protect everybody. Another great thing for contractors that we didn't bring up is we're able to provide them leads as well, right? We're not Angie's. I don't want to be Angie's. Angie sucks. You prepay for the leads. It's horrible. I used to use it all the time.
They're not real leads.
So how we do with ours is to build a really healthy relationship with these contractors and subcontractors is we give them the leads for free. They don't pay anything. If they close the job and it's worth it for them, then they get charged a fee. But we made that their decision, right? We built a company on honesty, right? If you're not going to be honest, we can follow up. We know how it works. We'll just chuck you off it. These are for real businesses that want to make money, not to get robbed, not scared of contractors, able to boost their bottom line. Huge. Because a lot of companies don't work for contractors. I got rid of everything. I had 19 contractors. I stopped. Completely stopped. That money is huge that my company can thrive on, right? And we're able to change that. We're able to have more people be able to bid to change the pricing. It changes everything. It opens up a new world of not being scared. And who wants to be scared, right? It's like somebody robbing you. I don't know if you have had a friend borrow money and say he's not going to pay you back. It pisses you off, right? Because he didn't pay you back and he said he was going to. It's not a loan. It's not a loan, right? Versus me just giving it to you. So technically your friend just robbed you, right? Or somebody takes from you. It's based on fear, right? Everything is fear-based. Like, who's going to take from me? Why does a homeowner need to feel that way or question that? Why does a contractor have to feel that way and question that?
You settle your bets on the 19th hole when you're gambling in golf, and I think that, you can't let someone get in their car and drive away. You have to get the money from them immediately. Even if it's your friend, they're going to rip you off.
We're trying to make the relationship a lot more frictionless and, restore, that kind of trust and security that Angie's has steadily eroded. And also we provide, 4 other aspects that those companies do not or cannot do or even thought of doing. And, we're currently working on strategic alliances with, Home Depot and Lowe's and just trying to get into their affiliate programs. Again, it's just awareness. A lot of these guys and contractors that we're talking to, it almost sounds too good to be true because nobody's done it in the past. So it's really just creating that awareness.
And I just can't neglect our chat, so I have to continue asking their questions. We'll start with Hans. Hans asked, I have a friend who renovates homes in Michigan. Will they be able to use your platform in the future?
Yes, absolutely. So right now we're in 5 states. We're in Connecticut, Delaware, Mass, Florida, and Ohio.
Meaning that the contracts that we have are accessible in those states. So
we're able to back them. Say, for example, we have a contractor out of Ohio that got took for $60,000. We were able to lien, foreclose, and the property is being sold by the state, right? So it's going to auction to get us whole. But that's because our contract is in play there. Now, we're still able to escrow any state. That's not a problem. So it's still the protection. If a contractor is not getting escrowed, he can do unlimited projects and get protected. A law firm is included, unlimited. And we back it up. We want to make sure that, if it does go south and it's over $5,000, we want to make sure we can get you to 80% mark for sure, right? Say, for example, I just got hit for $110,000, right? I hire a lawyer, $2,500, right? Get the lien out the door, go into foreclosure, then it's, $30,000, right? I'm chasing $30,000 while, having full certainty, right? Like the contractor in Ohio, we covered the law fees, so that was $16,060, right? So as a contractor, we're usually a little bit tighter, so to lose 60 and then take a chance to put 16 in, not knowing 100% sure, that's scary, right? That's scary. I just got hurt and then I got to pay a lawyer this amount of money to, cover that might not. With our contracts, we have it solved. We're good. We're buying your debt from you. If you use our system, you're covered.
So what we're established in 5 states right now. The capital raise, and the focus on the pitch that we've been kind of seeking, in addition to obviously chasing contractors, is pretty incredible in terms of the numbers. So Connecticut and Ohio. Connecticut has about 48,000. Connecticut has about 48,000 contractors. We projected 0.4%, which is 192 capture percentage of contractors. With that, on the subscription for the tradesmen, the numbers kind of blow up immediately, and we don't need funding. So that's why we've kind of equated everything to marketing. It costs about $1.5 million to build out the contracts or so, and advertising in each state. So we're really kind of focusing on the states that we're in to apply the proof of concept and to build what we're trying to do, expanding out, basically applying the same thing that's worked in the other states. I hope that made sense.
I think it does. And answering these operational questions matter of factly is, I think, very helpful, especially because, there are people that encounter this. Hopefully there are people listening that are, in this business or at least transacting in this space. My biggest complaint is I think that my handyman is paying more attention to someone who yells louder at them up in Fairfield, and should I yell at them more? And it's typically not my thing. So anytime you streamline a process and sort of grease the wheels with middlemen, it's like a no-brainer. So I think operationally this makes perfect sense. And another question from Traveler Jeff is, this is a smart business. Are you doing private placements? So I think just getting back to where you are in your capital raise, what does that look like? Are you trying to follow the typical venture capital type of model, or do you even know what that looks like?
We've been pretty successful.
Wild West, a little bit.
We've been successful. We do have one investor out of Greenwich that's a really phenomenal person.
Well, I guess what I was kind of going to lead into the adventure that this has been. Right? There's a definite need in the industry. There's a story here, and when I was kind of brought into it, and I had kind of buy into John's kind of passion and vision, and for everything that he's kind of created. So we started going to these venture capitalist conferences. Yeah. In Miami, we were in, all of these, they're all learning experiences. I come from a kind of a corporate buttoned up world, and John's, working in buildings and different kind of construction scenarios.
I smoke cigarettes.
And so there's this dance with people that have, what I was told, skills to write to the bills, which is true. And there's some guys that get it and they're hit with their impact in the industry. But it's a constant learning process. We're just learning kind of as we go from different perspectives.
Well, I would like to talk about a funny story. So we just got picked out of 460 companies to do a pitch, right? So I go up there, didn't realize it was a slideshow. I was I wasn't ready, right? And these are all investors that, it's a big marketplace for me, right? And then we did a call yesterday for a pitch scrub at this great company out of Rhode Island. They said we sucked at pitching our company, right? The guys was you're horrible. Eddie was doing it, and I kind of just, I snapped. I'm dude, you really want to know who I am? This is who I am. And I just blew him away. It's I have to raise capital from people that I don't want to do business with. I don't know, the white-collar world, right? I'm an electrician. I know blue-collar people. So I have to stand up, and I have to pitch this business in front of you. I feel like an asshole. I don't know if I'm allowed to swear. I apologize.
It's okay.
We'll bleep that out.
I don't, I have to do this song and dance. How about that, this is a great idea, and I'm a guy that doesn't quit. I'm a guy that's the bus can crash, and I'm still in the bus. I'm that guy, right? So, and I just feel like I have to play this game, and I just feel like it's all, it's not real, right? If I have to submit all this stuff to these companies, the first guy, I wired a whole marina. There's no problems. It was $1 million project, and I had a conversation. He's Jonathan, right? It's you're buying the guy.
So people that like tuna fish and people that don't. You go for the people that like tuna fish.
So it's very interesting raising capital. So yes, I'll take capital.
So I don't think it's appropriate to get upset and emotional, but you insulted PowerPoint, and we're sitting next to each other, so I can't climb over this table.
I like a good PowerPoint.
But
I hear that.
PowerPoint and presentation software are widely used by very valuable people, and it's just a funny story that you guys are encountering some of this nonsense. Having said that, it sounds like in the venture capital journey, you're kind of in the friends and family stage. You're probably gonna. I mean, hopefully you're gonna need lots of capital and you're going to grow this and, get to 50 states. I think it's pretty cool that you're approaching it the right way, formalizing things a bit. I've taken a look at the decks and the updates and, I guess, how did things end up with the pitch scrubbing?
Good, constructive. A lot of good points because it's again about different perspectives. These are one guy who's very accomplished and has a lot of insight and is a volunteer, which is good because it's unbiased. It was like what's that?
It was refreshing.
It was refreshing.
Yeah.
And he's like, listen, I want to hear more about Angie's List and what a POS it is and how it's not serving anyone. Yet they're dumping all these all this advertising into Squawk Box and X, Y, and Z. So people are like, oh, okay, but they're just really burning people versus reading off of your script, which because it was totally unexpected. I was like, this is I'm not having a good day. Can you give me some grace?
It was bad.
But he was like, I was hoping, that's kind of what I want to hear. And when John kind of got up and passionate about what the mission here was, it was very clear. The connection was immediately made. And that's, that's kind of the name of the game and the connection we're looking to make. It's an industry that's like the timing is now. And we're just trying to also play by the rules if there are, I guess. I don't know. John's great because he's like, no rules.
It was completely refreshing that I could be who I am.
Yeah.
And not be anybody else because who you're partnering with and who you're investing in, as I'm a contractor. I'm the guy that actually, lived in the industry for 22 years. Who else you wouldn't want anybody else to be partners with you, right?
Right.
So it was really nice to actually say how I felt about raising capital, and I know, PowerPoint, and I get it, right? But it was really refreshing to be open and talk and be honest, and he said that's exactly what your deck should be like, and that's where we're changing.
Yeah, I was going to say that, I feel they need to make the distinctions between, hedge funds, private equity, venture capital, and in the venture capital space, I think they are a lot more experienced in dealing with people that are small businesses. They're not like, the white collar PowerPoint types. And so hopefully you'll find the right investors that get that, and when you say you get passionate about something and you were getting defensive and it sounds like maybe Eddie was feeling a little bit of the bully and you stepped up and you were like, no, this isn't how it's done. This is, why we exist and why I through experiencing this pain over all these years, why I'm passionate about it. It sounds like when it comes from the heart and then you're actually demonstrating why this thing is valuable, people will presumably understand that. And, I think that your pitch should reflect who you are and why these people need to invest in your company because it will be successful. So there's a little bit of a dance between being assertive and saying yes, this is why we are the right place to invest. We've been solving a huge problem and painful process for a lot of people that are a lot of businesses, small businesses in particular, that are basically underrepresented, and there's all this inefficiency. So I think your pitch scrub and that feedback, it's constructive feedback, and
oh my God, yeah.
It's good that you're taking it away and doing it.
Yep.
Mark, we've left you quiet for a while.
Taking it all in.
Are you playing solitaire?
Yeah, hold on a second. I'm moving the king. No, this is, you guys are ground zero in all of this. So whenever, Bill brings in, a guest I don't know and vice versa, we're like, all right, how's this going to go? And it's amazing that all these different disciplines, people we've had on from traders to people like you in construction, away from pure finance, everyone's solving for the same thing, which is the core of our call, which is to hire better purpose. You're trying to take your electricians and your contractors and say, hire better purpose, let us deal with this other aspect because we learned about finance. We just learned how to do a pitch. Good for you, John. So now you can actually grow a business, right? And so I just, the part of what Bill and I want to do as a podcast, I want to thank you guys, is to develop it and learn as we do it. Because if we're learning, then the audience is learning about what's going on. So that's what I got out of this.
And we've had a very active chat today. I apologize if we're going to miss a few questions, but it seems like we're running up on time, and we should definitely give you all the opportunity to tell us where to find you. Social media, like I mentioned, is a necessary evil. So if you have Twitter and LinkedIn or any of that kind of stuff, at least plug your website. But hopefully there are some people that listen today, and Traveler Jeff in particular, I think has been giving some feedback, and I'll just end that with VC is too buttoned up, stay authentic, pitch in work boots, the right guy will fund it.
I'm in work boots with my electrical shirt on right now. That's what I'm doing. I'm going to Hamptons to a crazy event, right? That is like, you don't know to the day before I got invited. It's like this big thing. I'm rolling up in work boots. I just don't care. I don't care anymore. Like, I don't want to slick my hair back and look like somebody I'm not. I just want to be me.
You have hair? Dude, that's awesome.
Either you buy it or not, and you're going to miss it anyway. So it's either you want to be part of it or you don't want to be part of it.
Yeah.
Yeah. No, so I just actually sent you the Tradesman website. You can put that in the chat. You check that out. We've got 2 apps out. The Tradesman's can be found on Apple and Google Play for reliability for homeowners, and Tradesman's for our trades guys. But our apps are developed. They're in the app stores.
Jump in, start using.
Yeah, jump in, start using.
Cool. So we can put the links to the apps in the notes, and we'll also promote those on social media. But what does it take after you download the app to get going?
Oh God, it's super easy. For contractors to get on so they're protected, obviously, it's $4,500 a year. You could do a one-time payment or monthly. It's very easy. So you go in, all your company information, your logo.
And also, so the first month is kind of free, where they can use contracts and kind of see everything.
So you can give it a check. And it's super simple. You just put all your information, your tax information, your insurance, all that great stuff. Because when you're starting to do contracts, like say I'm going to Sam's house to put 25 recessed lights in, it takes 2 seconds to send an email, or you just drop the description in, the price, it's DocuSign, it's locked in, you're ready to go. It's super, super, super easy. It's bilingual too, so it's in Spanish. And very, very, very simple. Listen, I hate doing paperwork. I'm not a paperwork dude. It sucks. But this is like click, 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 send, done. And it shows that each person signed and you're ready to go. It's super simple.
As a homeowner, it doesn't cost you anything to be on the site.
I had to fight with lawyers for a long time to get this contract to be this easy. I mean, like weeks of arguments. Like, you can't do that. You can't do that. Well, contractors don't want to put the time into that, right? And we came to a solution, and David Rosenberg.
Yes.
Me and him spent some time disagreeing.
Hardliner, yeah.
But fantastic
Great guy. Fantastic.
Couldn't be happier.
Great at ordering apps. Give him a plug for that.
Yep.
He's Canadian.
Okay.
Is that good or bad?
Great. It's great.
Yeah.
It's great.
Well, who is the best athlete out of Canada?
Geddy Lee.
Snap that.
I know, I did.
Bobby Orr.
Yeah. Well, Geddy Lee, first of all, he played bass for Rush. So, I disqualified myself from any sort of, question that referred to the sports. But if we're going to talk about sports, why don't we just talk about Wayne Gretzky?
Well, Wayne Gretzky earned his way into the conversation. That's kind of like I like to kick off the conversation.
What's the most important thing about Wayne Gretzky? You miss 100% of the shots you don't take. That's what the tradesmen are doing.
Yep.
I love that, yeah.
Bring it home.
Well, thanks, everybody, and we'll see you again next week.
Thanks, Bill. Thanks, Mark.
Thanks, all.
Thanks, guys.
Great to meet you guys.
Great meeting as well.